on theory of distribution. Today we will discuss about entrepreneurship. Now, entrepreneur is one of the factor of production, and we know that entrepreneur is actually the most important factor of production. Entrepreneur is assigned the role of assembling all the other factors of production like land, labor and capital in the production field, and he organizes entire production process, and it is the most important factor of production. And entrepreneurship is actually a high risk, and that is why high risk activity, and that is why it is the most highly rewarding also. And entrepreneur is actually the innovator, entrepreneur is the organizer, entrepreneur innovates about new ideas, entrepreneur introduces new commodities, entrepreneur may introduce new services or new business processes. Now there are different types of entrepreneurs according to the scale of operation. We may identify 4 types of entrepreneurs. For example, they may be small scale entrepreneurs or small business. They may have some scalable startups. They may have some large company, or they may have some social entrepreneurship. Now, grocery or hairdressing or consultancy, travel agency, e-commerce storefronts, carpentering, all these may go on to small business or small entrepreneurship. Now, in case of actually their scale of operation is very limited. Their total production is also very limited, and they generally deal with traditional products. Now, in case of scalable startups are those companies that believe that their vision or mission could change the world. These companies produce innovative products, and mostly we can see scalable startups in information technology sector or in artificial intelligence sector. They may have some large company also. This is one type of entrepreneurship. And in case of large company, we know that these companies may produce steel or may produce petroleum and all these things. And there is another special type of entrepreneurship, and today that particular type is becoming very important, and that is social entrepreneurship. Social entrepreneurs are innovators who focus on creating products and services that solve social needs. That means that they not only go for production, they consider social needs also. And this type of company may have some profit urge, or it may operate under the non-profit motive also, or there may have some company which are hybrid. For example, a portion of the company is going for earning profit, and the other part is going for any particular social means. For example, we may say that if a company is dealing with solid waste management, then we know that they can charge prices, or they can charge service charge for their operation from municipalities or such local bodies, and from that service charge they may earn profit. But there is another superior goal of their operation, that is managing solid waste in the urban area particularly. Now, when entrepreneurs are engaged into production, they are engaged for one thing, that is for earning profit. Now, entrepreneur has a goal, that is maximization of profit, and this profit is somewhat confusing term. Actually, persons involving in different professions may consider profit differently. For example, a businessman think profit in some way, accountant consider profit in some way, policymakers may consider profit in some way, and economists also consider profit in some way, and they individually, all these types of individuals or entities have different definitions or different conceptions of profit. In this lecture series, we are emphasizing on economics. So here we can say that according to economic theories, profit may be defined as the difference between total revenue and total cost. Now, profit is one of the factor earning. It is going to entrepreneurs, and we know that rent or wage or interest are other types of factor earnings, and it is to be noted that profit as a factor earning has some differences or has some distinguishing features as a factor earning. For example, unlike other factor earnings, profit is a residual income. All the other factors, that is land, labor or capital, are engaged in the production field on the basis of some specific contract. So factor earnings going to laborers or landowners or capitalists are actually contractual income. On the other hand, the profit which is left after paying all the other obligations, so profit may be considered as a residual income. Now, other contractual incomes are never be negative. Wage will not be negative, or rent will not be negative, or interest will not be negative, but profit may be negative, because profit is the residual income. So if the entrepreneur has to spend more money than he is earning, so in that case he will have, or he would have, negative profit. And since it is residual, its fluctuations is far more than other factor earnings. Other factors are earning a fixed amount of income, but since amount of profit varies in every production cycle, so profit is very much fluctuating. Now, this profit has different concepts, or different people consider profit differently, so we will have different definitions of profit also. One such definition is gross profit and net profit. In case of gross profit, what we have to do, we have to take the difference between revenue and cost of goods sold. Now, what is cost of goods sold? It is the production cost, as well as it is the cost involved in marketing the commodity, or it involves the transport cost. Now, when we define gross profit, then gross profit is the revenue, difference between revenue and cost of goods sold. Now, within revenue means the amount of money that a company is receiving after selling any commodity. Now, what about cost of goods sold? In case of cost of goods sold, we have to consider all the cost. For example, cost of producing the good, or direct material cost, direct labor cost, equipment cost, shipping cost, repairing cost. All these things are to be deducted from revenue, and we get gross profit. Now, from gross profit we can derive another concept, that is net profit, and net profit is defined as the difference between gross profit and expenses. Now, within gross profit we have already deducted all the direct costs. Now, in case of expenses, we have to consider some of the indirect costs also. For example, within expenses we include operating expenses, interests and taxes. And within operating expenses, there may have rent, depreciation, employee salaries, etc. So, when any production unit is producing any commodity, then we may assume that the company is producing any rented building, so the company has to pay rent after some period of time. Moreover, if the company invest by taking loan from any financial institutions, then there must have some interest payment also. And moreover, all the companies are to follow government regulations and government obligations, and government obligations are meet up by means of taxes. So when we deduct all these things, then we get net profit. So net profit is the difference between gross profit and expenses, and within expenses we include items like rent, depreciation, employee salaries, interest and taxes. If we want to make some distinction between gross profit and net profit, then we can say that gross profit should have larger value than the net profit, because net profit deducts more items than gross profit. Moreover, net profit is a derivative concept. It comes from gross profit. After calculating gross profit, we may calculate net profit. And there is another concept that is known as accounting profit, and this concept of accounting profit is more important for accountants during their audit activities. Accounting profit is calculated by taking the difference between money revenue that a firm is earning from selling any commodity, and the all the explicit costs. That means after receiving money, that is revenue, after selling any commodity, if the company subtracts all the explicit costs, then we can find accounting profit. Now, in case of explicit cost, the company has to include several items. For example, labor cost, inventory needed for production, raw material cost, transportation cost, sales and marketing cost, production cost, and overhead. So these items are subtracted from total revenue, and we get the concept of accounting profit. Now there is another concept, there is another important concept, that is economic profit. Economic profit is slightly different compared to accounting profit. In case of economic profit, what we have to do, we have to deduct explicit cost as well as implicit cost from total revenue. Now what about implicit cost? In case of implicit cost, opportunity cost are to be considered. Now what about opportunity cost? Opportunity cost are the benefit that a firm misses out, or suppose a company is producing any commodity. So when the company is producing any commodity, it actually foregoing any possible production, any other possible production. So it is the potential benefit that the firm may earn from alternative business. So opportunity cost is a concept, potential concept, and this opportunity cost has to be deducted from total revenue. So in case of economic profit, what we have to do, we have to take the difference between total profit and explicit cost plus opportunity cost. So these are the different concepts between different concepts of profit. Now it has to be considered that such accounting profit is calculated on the basis of a particular principle, and that principle is known as GAAP, GAAP, that is generally accepted accounting principles. So accounting profit is calculated on the basis of GAAP. On the other hand, economic profit is calculated on the basis of some established economic principles, and for different purposes we have to calculate all the types of profit calculations. And for example, when the policy makers are going for any plan for future economic development, they would calculate profits on the basis of economic profit concept. On the other hand, when auditor is going to inspect any company's performance, he would consider accounting profit. So these are the different concepts of profit. Now, profit is a factor income, and we know that such factor income should be earned by entrepreneurs, and as like different factor incomes, profit has different theories for its genesis. And if we want to classify different theories, then we can identify at least 7 theories on genesis of profit. And these 7 theories may include rate theory of profit. Some says that, for example, Walker says that profit is nothing but one type of rent. And there is another concept given by Tausig, and Tausig considered that profit is nothing but a special type of wage. Similarly, there is Howley, who think that profit is originated due to the risk-taking behavior of the entrepreneurs. J.B. Clark considered that profit is going to the entrepreneurs, because entrepreneurs are dealing a dynamic world, and since the entrepreneur is dealing a dynamic world, he must be given some benefit, and that benefit is profit. Similarly, Schumpeter considered that entrepreneurs are innovators, so due to their innovative nature, they will earn profit. There is Frank Knight also. Frank Knight considers that profit is arising due to the uncertainty of the business environment. So these are different theories of profit, and ultimately we can say that profit is something which is going to the entrepreneurs, and entrepreneurs is the most important factor of production. So that's all for today's lecture. Thank you all.